Now then the question becomes, well, what makes a great stock that is a value stock, that is a value investment? Well, defining a value stock is basically just saying it is inexpensive relative to its revenues, earnings, cash flows, and other financial metrics, things of the like. However, the best stocks have these attractive characteristics that you would find, and you would say, oh, well, these are characteristics of a particular stock that we like and that help us to determine our intrinsic value and make the best decisions that we can when it comes to the long-term value of a particular company. And so these are just a few things that we would look for that would make really, really good value stocks. The first one is a well-established business with long history of success. And obviously the reason that is because the longer that something is established, then the easier it becomes to determine what the value of that thing is. It is not easy to determine value just based on some short-term success. It is not easy to determine value just based on just a company recently going public or a company that struggled for a long time and now is turning it around. It's not easy to find value in those particular situations. But if a company is established and has a long history of success, that would be an interesting company to look at when it comes to trying to find a value play. And then you also want to find a company that has consistent profitability. It is very hard to determine the value of something if it has negative earnings. And that is true whether or not you are looking at a value stock, whether or not you are looking to invest in this type of way. If you're trying to find the value of any particular company, it is difficult to find the value of a company that has no earnings at all or has negative earnings in many cases. And so we want to find a well-established company that has consistent profitability, been profitable for a period of time. That way we can determine what the growth rate of that profitability is and whether or not that profitability is sustainable over the long term. And that will help us to determine what our intrinsic value will be, and it will help us to determine whether or not this is a great value stock or not. Then we'll also look for stable revenue streams without huge amounts of growth, but typically also without big contractions in sales either. So we're looking for stability in revenues, because when it comes down to it, when you're looking at what the value of a stock is and you're trying to determine whether or not you should invest in something, you have to be able to determine if that particular company is creating revenues. Now, earnings are extremely important. Cash flow is extremely important. But if you're not selling anything, if you're not actually able to make sales and have revenues in your firm, then there will be no cash flow. There will be no earnings. And so having some stability in sales and being able to see that there are revenue growths within these particular types of companies, but you don't see a lot of ebbs and flows, it allows you to have a better idea of what future revenue streams are going to look like, and therefore determine what the intrinsic value of a particular stock is today. Because when we are trying to determine what intrinsic value is, we are taking the present value of future cash flow. So if you wonder why we look for consistent profitability and stable revenue streams, because if we want to determine what's going to happen in the future and discount that back to today, then the only way that that can happen is if we have some general idea of what the future will look like. And the future is better predicted by things that are more stable and consistent than things that fluctuate a lot, or a company that may have negative earnings and the earnings pop positive or whatever it may be. That can really throw growth rates off, and thus that can throw off your intrinsic value calculation quite a bit. And then another attractive characteristic of a value stock, of a value investment, is dividend payments. And this is not required, obviously. And we talked yesterday about what dividends are and why they matter and why they can help us. So we know that dividends can be reinvested over the long term and help us to build long-term wealth. And we know that dividends are companies paying out pieces of their earnings to their investors. But the whole idea is that if a company is paying dividends and have done so for a long time, that again helps us determine what intrinsic value is, because you can discount their dividends back. And that is an extremely useful thing to do, especially if they have grown their dividend over time. Again, this is not a thing that you have to do. You do not have to have a dividend stock to have a good value stock. But if something does pay dividends, the dividends are growing consistently or are relatively stable, then we can get a good idea of what the value of that particular company is. If it also has, the stable revenue streams, the consistent profitability, and is a well-established business that has long-term success. And so if it has all of those things, then we may be looking at a very, very good candidate for a value stock that we might want to invest our money in. And so if you see these things, it is important to understand that a company that has them isn't necessarily a great value stock. Okay, so even though a company may have all of these things that we just said, it doesn't mean that it has to be a great value stock. Sometimes a stock only appears to be a good value for investors, but is actually a value trap.